What's up, guys? Welcome back to the Investing for Beginners community. I'm your host, Johnny. In today's video, I'm going to show you a company that has a 6% dividend yield and it's about to hit its 52-week low. Yeah, so let's show you how to buy low, ride the wave back to the top, make over 80 to 100% profit while making dividends as it goes to the top. All that I ask for this free information is for you to smash that subscribe button and smash the like button, right? All right, guys, that's it. That's all that I ask. Okay, so Whirlpool, it's at $110 right now, guys. I'm going to show you a strategy where you can take a 52-week low, like 98 bucks, ride the wave back up to their 52-week high at $160, and then lock in that profit. Sell it if you need to or want to, ride the wave back down, and then buy some more. Now, this can be risky, so make sure you're doing it with a solid company first. Make sure you do your research. I'm not telling you to buy, sell, or hold anything. All I can do is show you what I'm personally doing and how I'm going to take advantage of the stock market in 2024. That's right, guys. Some people are options trading. Some people are doing some day trading. What we're going to do is a long-term play strategy, buy low, sell high, but with a twist, because we'll be getting dividends. That's right, okay? So you don't really know, like, past performance is not guarantee future performance. So remember that. All we can do is speculate. But as you can see here, their max life is up 95%. In 5 years, they are down 13%, okay? Now, this is important to remember. They're down 13%, but look at this. Look at that. They're up over 99% from the time they were down at 126 to the time it went up to 252. You can make 100% profit from February 8th, 2019 to May 7th, 2021. Now, of course, this right here should have never happened, right? This was a weird thing. This is just one of those things that you can't control. But this downtrend, I would not necessarily say to play a downtrending stock, right? We want to play stocks that are going up. So this is definitely a little high risk. Do your research, but this is what I'm thinking here, okay? We are hitting 52-week lows. So even if it bounced back to the 158 mark, maybe even the 148 mark, you can make some money. And if you're wanting to hold this long term, Whirlpool, all it's going to do is go up. Whirlpool is in freaking everywhere, guys. They manufacturing and marketing home appliances, literally everything you could think of: laundry appliances, refrigerator and freezer appliances, cook appliances, home dishwasher appliances. They even have room air conditioner equipment, mixers, and portable other household appliances. Now, they have 61,000 employees. They're headquartered in Michigan, and they were founded in 1911. Can you believe that? This is an old company that's been around for a while. Now, they have a $6 billion market cap with a B, so we don't necessarily look at too many of these big companies on this channel. I tend to look for companies that we may not have heard of, kind of get those ones under the radar so we can make those 8, 9, 10% dividend yields comfortably and with little to no risk. Now, with this company though, it's a higher market cap right off the bat. So their PE ratio doesn't affect it as much. Now, it still affects it. It is a negative, and I don't recommend investing in a negative PE ratio, especially for investors. We want to invest in companies that have a trend line going up. Now, this does on its max life, but its max life was back in 2000. So this is showing over 24 years of history. Now, you don't want to hold this for 24 years, right? But what we want to do is, hold it for a little while. This is from December 21 to December 24, so about 3 years of decline. But then look how fast it came back up from 2020 to 2021, about a year. From 2011 to 2015, about 3 years. This was really good progress here. Now, doesn't mean it's going to necessarily go up. I'm already down about 4% on a single share. I bought this share a while back, average cost $114. All I'm going to do with this is buy some more as it's going down to that $98 mark. if it touches, and then once it does, load up, ride that wave back up to the top, get some 6% dividend yields, okay, while we wait for it to go up. I'm thinking long term anyways. So this is definitely one of those strategies, long term, but you're going to buy low at the lowest point possible, at the 52-week low, okay? And it could definitely go lower. It could go to 90 or 80. It could go to 20. So definitely do your research, right? But 57 out of 7 analysts on this are saying to hold, 14 are saying to buy, and 28% are saying to sell. Now their earnings per share is looking pretty good. See how it goes a little bit down and then it goes a little up, and now we're just kind of going into a little bit of the down phase right here. But their estimated earnings per share is $3.56, so they're definitely making money. They're not losing money. It's Whirlpool after all, and that is my thoughts on Whirlpool right now. Okay, guys. That's what I'm thinking. It's at a very low. There's even this on January 21st from Yahoo saying that the 3 great value stocks are going to set to soar in 2024. Whirlpool, Devon Energy, and PTC. Okay. If you guys want me to do a video on Devon Energy or PTC, drop a comment below and I can do a video on those. But definitely check this company out if you haven't already. There's some great potential here now that it's at its 52-week low. Load up, ride the wave, get some dividends, and get a cheap, really well undervalued company for a discount. This is the great part about these highs and lows. Use this opportunity when everyone's selling off and there is a low point to buy more and get a good value. All right, guys. Hope you enjoyed this content. Smash the like button so that I do know that you enjoyed it, and leave a comment below. Thanks for watching, and we'll see you guys in the next one.